Hi, Aman Gulia here from Harcourts, and welcome to your Auckland real estate market update. Let's dive into the latest trends shaping the property landscape. Type of listings. Patience is key in the slower market. Display price listings are now more popular than auctions, offering vendors a less time-pressured sales method. Market sentiment. Many Kiwis are holding off on listing their properties, potentially due to the interest rate uncertainties. Market shifts. Bank credit has improved and landlords are finding it easier to secure good tenants. Investor behavior. Investors are increasingly selling and the average retention period is declining. However, concerns about house falling prices are easing now. Migration and housing. The migration boom and its impact on house price inflation are notable. The ratio of house prices to household income remains above pre-pandemic levels. Interest rate predictions are uncertain, but a historical analysis can guide decisions. Recent fluctuations in borrowing costs add interest to the market. House construction is declining, impacting housing supply growth. This trend aligns with the bottom of the price cycle.
Hi everyone, David here from Harcourts JK Realty, giving you an update for May 2023. Look, it's an interesting time in the market. We've had National come out saying they don't support the new MDRS. We've got the unitary plan in place, but that MDRS just dragging a little bit. So we're not quite sure what's going on in that development space, and the buyer sentiment's pretty much the same. We have had a few start to come back into the market and buy some of our properties, which is really exciting. We had about 16 deals go unconditional last week. A lot of them multi-house projects where there's adjoining neighbours. Quite a bit of interest in some really big future urban land in Drury, even though there's a slight change potentially coming up there through council. And we had 3 of our adjoining properties go unconditional last week as well. So there is some uptake in the market. I think the big thing we're all looking for is, when are we at the bottom? No one knows. You only know when you're past it and you're looking back. So the main thing that I tell everyone at the moment is don't miss out. The prices are actually pretty good. And if you buy now, you've got RC, BC, EPA, you've got 9-12 months there, you've got 18 months of building. What's the market going to be in 2.5 years? I tell you what, it's not going to be the same as it is now. The first home buyers, great time to buy. And if you're selling, as long as you're buying in the same market, doesn't really matter. So there are still transactions out there. I think the key thing is don't miss out on the bottom of the market. And the other really exciting thing for developers going forward is, when we do kind of hit that bottom of the market, there's some media sentiment about it, then the off the plan sales go through the roof, because you can buy off the plan now, you get the value with the capital gains going up over time if it's got maybe 6-9 months to settle, and then you've got the interest rates that come down over those same 6 to 9 months. So when you actually settle, you've made both gains in both areas. That's where the market goes. That's where the investors go when they're at the bottom of the market. So if you've got stock off the plans that you're needing to sell, get in touch. We'll have it ready to hit the market when the time is right, so you guys can get the best out of it all. Thanks.
Hi everyone, and welcome to the marketing update. A quick update from me, just so that you guys know about the current changes going on in the marketplace. As you would have noticed, the OCR changes has recently happened with the 25 basis points. Now, I would say somewhat this is good news, because it's showing that the RBNZ is currently looking at easing off the increases. Based on that, the economists are saying that we would see the interest rates looking to reduce roughly around the start of 2024, which will be great news, seeing those declines. However, during that period, what we would have seen recently in the market is that the 1 and 2 year rates have increased across banks. That's on about 20 basis points.
Hello everyone, some interesting updates since last we were able to speak to you. Auckland Council requested a delay to the hearing process for Plan Change 78. This is a result of the flooding which occurred across Auckland, and also kickback in areas such as Christchurch and Hamilton. The delay has been granted to the hearing process in Auckland. This will see a decision in April 2025 that is clearly now subject to Labour still being in government, with National coming out opposing the MDRS and what that will mean. In part, this has been brought about from the draft Future Urban Land Supply strategy as well, which seeks to allow future urban zone land to be developed as greenfields across Auckland, and local government has put out a policy which is seeking to delay and prevent that, noting the costs of the infrastructure for this to occur. Ideally, what was to occur was that the MDRS would facilitate the additional development from preventing the greenfield development, but now that's up in air. So we're basically stuck in limbo, trying to figure out what will occur over the next year and a half, and the October election is going to be key for the outcome here. What you can still do currently under the MDRS is it is still live if you are in alignment with permitted activities. So if you have a site which is zoned single house zone and it's going to mixed housing urban currently, you are still able to put 3 dwellings on that as of right, and it would be suggested that you potentially do that, noting that we have no certainty going forward. In terms of flooding which has occurred, it's also resulted in Healthy Waters looking at increasing their standards for development in flood zones, flood sensitive areas, and what would be minimum freeboards. Clearly there's a lack of desire for developing in flood areas, and Auckland Council is critiquing anything which is currently in for consent and hasn't had an approval to date, and therefore they'll be looking to raise the levels. The 1 in 100 has been reverted and reviewed. This might go to a 1 in 50 year standard, and the freeboards might go from a 500 millimetre clearance to a 700 to 800 millimetre clearance across the city.
Stay tuned for more updates on Auckland real estate market. Seek professional advice to navigate the changing dynamics. Thanks for watching. See you next time.